Just because something looks great on paper, you can manipulate that 9 different ways to make a return look great. And I think most people are aware of that fundamentally. But truly knowing that team, knowing their results means everything, and even down to the point of how they communicate with you.
Welcome. You're listening to the Apartment Investing Show. This is where you'll learn how to start or scale your apartment investing career. Your host, Adam Adams, believes in personal development, physically, financially, and mentally. Adam and his guests will show you how to create residual income by investing in apartment communities. Now, here's your host, Adam AAA Adams.
And we're back with the Apartment Investing Show. And I'm excited to have Thomas Black. How are you, Thomas?
Great, doing great. How are you doing?
I am doing well. It's good morning. On Wednesdays is when we do all of these episodes. We record sometimes like 6 episodes on a Wednesday, and you're the first. So I just woke up like an hour ago.
Yeah, that's good. It's good. You start from the top. You can work your way down.
Absolutely. Start from the top. It's all downhill from here.
It is,
So a little bit about Thomas is that they work with doctors and dentists, and he's raised quite a bit of money. How much money have you raised with your doctor and dentist group?
Oh, last 3 years, about 55 million, right around there.
55 million just in the last 3 years. You are an MD yourself, right?
I am indeed.
All right. Co-founder of Equity MD, author of Passive Income Physicians, Surviving a Career Crisis by Expanding Net Worth, and a board-certified emergency medicine physician. In the past 10 years, he has transitioned in over $250 million successfully in real estate. That's a lot, Thomas. $250 million.
$250 million. Yep. A lot of buying and selling in there. It's been good.
It's good stuff. So during the pre-interview, I asked Thomas, I said, what's your superpower? And he said, building teams. And I said, what do you guys do that other people kind of fail at? It's you notice that other teams are not doing it the same way. And you talked about operations. So maybe we'll pull the episode into building an operations team. But first, the first 4. First is the first 4 questions. So number 1, why apartments in the first place?
Wow. I think when I go back 10 years, when I started getting really frustrated with medicine, buying single family homes and things, I realized that it was great and the opportunity was there. But like most people learn in that arena, it's a natural progression eventually, dealing with the debt, economies of scale, and all sorts of the ability where your operations and the team itself can be streamlined and becomes much more profitable. So that's really what started it was multifamily, and then we were able to branch out. But, looking back at it, multifamily is still the cornerstone. I mean, when you look at rough times, just like the position we're in right now, it's the one that seems to be most stable with the future outlook that we have.
Okay. And what actionable takeaways did you learn on your very first multifamily deal you ever did? Take us back to it. What year was it? And what are the actionable takeaways?
I'll say 2 because it's a dual pronged approach. So I started doing a small development on my own. I bought when I was, I'd owned about 7 homes. So I'm literally getting off at 3 a.m. from the emergency department. I had bought some foreclosure land in the little town in East Texas and decided, hey, it can't be that hard. I'm going to build a 20-unit apartment complex. A lot of grit and a lot of money later. I was successful, sold it, did really well, probably learned a master's degree in development and heartache. So lesson number 1 was you can push yourself through a lot of pain and anxiety and learn the process. It just takes jumping off that cliff. You may not make as much money as you want, but you're going to make money if you do things right and you stick with it. So that would be my first. And the asterisk there is I don't develop. I won't do it again ever in my life without an appropriate team. Not my bag for as many headaches as I had. So that was probably year 2011, 2012. I continued to buy apartments. The first really big deal that I did was 2014, late 2014, 2015. Bought a 300 units place in Arlington, Texas. Just sub 8 cap. Was, lost tons of sleep. Thought, raising $3 million was just an unattainable thing, but was able to borrow some funds for the earnest money and pay side notes because I didn't have it myself. And after, a lot of sleepless nights, 2 years and 4 days later, we sold that, having bought it for 12 million, sold it for 21. So that was really what lit the fire under me, and realized that, hey, there's something really special here, especially with physicians, and this ability to partner and show them that there's so many ways of ownership and creating an equity position where we don't have that in healthcare anymore because of several laws and private equity. So, it was just do it. I hate to say that, it seems a little cliche, but during that time, it worked, and it was an amazing experience.
Well, I want to dive into this 300 unit for a bit. You said you borrowed EMD, earnest money deposit. How much was that? How much was the EMD?
100 grand.
100 grand. And so there's a couple of listeners, and they might not quite have 100 grand, and they might know that they need to put 100 grand. Would you suggest that they tell themselves that, okay, I don't have 100 grand, so there's no way I could do this, and just pull away? Or would you suggest that they find a way, think outside the box?
So, and there goes the quintessential ideals of grit. I was not going to let this thing pass me by. I had a partner that I had developed with that was a little bit higher net worth than I was at the time. I had just moved specifically from the East Texas market, having resigned my partnership in a Democratic physician group because I just couldn't take it anymore, to Dallas, Fort Worth area to do this very thing, to really legitimize what I knew and what I knew in my heart was going to be the right thing to do. So yeah, I was able to convince two people about the pro forma, and I had proven results before, somewhat, that I would take 50 grand from them and either convert that in equity, or I would pay them a 6% pref out of my own money. So if and when that deal went south during that period, yeah, I mean, there was a 60-day period that I was on the hook for a personal guarantee for those. When we closed the deal, of course, the EM came back out, and it was successful. In addition to the equity that they had, they made 122% return on their money, in addition to 6% hard money that they had in the deal. So absolutely would. Where there is a will, there's an absolute way to get things done. It may require a lot of Tums and Zantac, but at the end of the day, there's always a solution somewhere in there if you want it bad enough.
Awesome. Why 300 units? And since you did the 300 units, have you gone smaller or have you gone bigger?
Why 300? It was the right place, right comps, right asset class, right price. So it wasn't necessarily anything about the unit counts. It was really about the deal. So it was, under market rents at an 8 cap in 2015, roughly. Seemed like craziness at the time, right? 8 cap, oh my God. It was a late 1960s flat roof asset that we bought, I don't even know, 50s a door. And that same place was transacted twice since I've sold it. I believe they were hitting mid 90s now. So I was fortunate to do really well on it. But you look to see what the state of the economy did, and the cap rate compression has just gotten unbelievably incredible. So to answer your question, 300 was just, there was nothing magic about it. It was just that the deal fit. And oddly enough, I don't think we've done a deal that's been 300 or over again. And that's mainly probably because of the economics of the price and and how the deal was structured. So it's nothing about the units. I think we've done 270 something we own in the North Carolina market. That's probably our next largest acquisition. But again, that was 2 times more expensive actually than this asset was going in. So
I was also wondering, well, we'll just point out that you said you bought it for 12 million, sold it for 21. That's awesome. Congrats.
Yeah. Thank you.
You talked about the raise being a $3 million raise, and at the time it seemed nuts. It seemed crazy. It seemed almost unattainable. I remember my first raise was only 300,000, 360,000. And that's a lot of money, just 360,000. But
It
now,
is.
like after
Yeah.
looking back, I mean, you've done 55 million, I think it was, just over the
Yep.
last 3 years. But just take us back to that 3 million and take us back to like what you were thinking about it, what your plan was about it, what mistakes you might have made, or just challenges that you saw getting that first 3 million raise that helped you do 55 million in the last couple
Sure.
of years.
Yeah, I think it was the first time. I mean, other than the smaller, I had pulled along some physicians on some single family homes and things like that. It was recourse debt that I was able to convince them to sign the note with me to be able to leverage up a little bit more because I was buying homes at the downturn for 40 cents on the dollar, and the economics made sense. Going into this situation, it was a bigger deal to branch out. Fortunately I had been trying to cultivate those relationships for a long time. And it was really surprising to me on the first one who you think is going to be in your corner with all the relationships that you've done and who actually steps up was really interesting to me. Because the people you think necessarily are high net worth individuals, at the time it was still a 503 or 506B deal. I would say the biggest challenge is, I think, in the way I approached it then, I literally had a function at my house. I mean, I catered it and had wine and all kinds of stuff. And we broke off into two groups and I did this business plan type thing. And it was very mid-level marketing kind of a feel. And it took probably 2 weeks to raise that money, but it worked. The mistakes I probably made, a lot of people do webinars, things like that. One of the things that I felt very strongly early on is I wanted an era of very professional and polished look. And so to this day, we spend a lot of time graphically designing our offerings and things like that. And if we do put content out, whether it's going to be a webinar, it's done with a level of expertise so that we're not sitting there, on some sort of, Zoom wasn't even around then, on a conference call where the dog's barking and the doorbell's ringing, things like that you tend to hear sometimes. And it's just good because somebody's trusting you with a significant amount of their capital. You need to treat it very, very serious from the very beginning. I mean, it is an absolute business, and you have to create that, and that's one of my firm beliefs. So I would say we've changed up that order quite a bit because I want to be able to control the environment as much as possible.
It was interesting to hear you say how you cultivated those relationships ahead of time. Right. I want to get your thoughts on a couple of things. Number one is, how important is it to cultivate relationships? And number two, should you be cultivating relationships before you put in offers? Reason why I ask that is because I know there's a lot of coaching programs that are helping other people get into apartments these days. And yeah, I think that their first step is put in offers, call brokers. But from what you said, it almost felt like you thought that raising the money ahead of time was important. So let me ask you these two questions. How important is it to cultivate relationships? And when in the step is it? Is it before you put in your first deal offers with brokers?
No, I think it's a parallel path, to be honest with you. I think it was just that during the time I was there, it happened to be that I had the history of doing that. So, I mean, I went to a physician meeting in I think it was October of 14. And I'll never forget, I had printed up flyers, and I was going around to people that I knew, and they thought I was crazy. I'm just like, hey, I'm doing this deal. And I, me because I've been doing this for a number of years. And I think I was trying to figure out any way to create a foundation. And so it is uber important because when we say your relationship with your investors has to be really, really good. But then you're right, jumping on a plane, for example, to go to a market that you're looking at is really important too, to take a broker out for dinner. They get solicited constantly. So the more you can get face time, and that includes with your investors, the better off you are. But in the end of the the day, it comes down to communication and foundation and legitimacy. If you can't create a foundation of trust there and prove results, then they're not going to believe anything you say anyway. So there has to be some sort of foundation for me anyway. Just going out there and magically trying to get apartments under wraps when you've never done it before, and or you're going to try and undertake some large acquisition without having the relationship is a little bit backwards. So I mean, it's important to, I think in that case you partner. You find somebody, and that's a double-edged sword, man. Partnerships can be really hard, and they can be very, very slippery. So I would implore people to get to know who they're in bed with, because it's worse than a divorce whenever it goes bad.
Good stuff. Yeah, and sometimes partnerships last longer than marriages, right?
They do. They do. But I promise you, I think they're more stressful to get out of than a marriage. Not having gone through a divorce myself, so I don't really have a frame of reference.
That's saying something. That's saying something.
Yeah, they're bad because there's a lot of animosity, right? There's a lot of, it's funny when the chips are down, people's personality change specifically when they're stressed about finances. It changes people pretty dramatically.
So I want to move into just understanding what you guys do operationally and what you do differently.
Sure.
This was something we talked a little bit about in the pre-interview, and it sounds like it's made you who you are. It's made your team successful, and so I guess the best way to ask it is for you to give us a couple of tips or strategies that you've used within building your team and hiring managers and managing managers and having your operations set up that you believe that will help most of the listeners, because we just learn it a different way. We just try it a different way. So what are the ways that you guys made, I guess it's $9 million, almost doubled the value of that 300 unit?
Yeah, and I think the crux of this and the important thing is, especially when people are starting out, that they're obviously going to use a third party and not go at it for many different reasons of self-managing. But you're only as good as your manager and your regional, hands down. Period. You cannot be on that property 24/7. If you're local, you can, but that's a detriment too. Walking your property every day is not. I wouldn't advise it. Giving people enough space so they can operate and finding the right team members. What we learned over the years, having been through multiple third-party management companies, was essentially to us, we could view them in a light and they would say all the right things, and we would try and create this partnership together, because our belief is those are our employees. I mean, they're not paid, they're paid by us, but they're another, downline, and they're technically the management employees, correct? But the way we treat them, the way we view our business, they have to be aligned with our culture and how we treat our residents, how we do things. And that goes from the leasing agent all the way down to inputting accounting. As you probably know with some of your ownerships or some of the things you've owned, two different management companies may have a vastly different style of accounting and how they traditionally, input capital expenditures and everything, which in the end of the day, if that funnels down to you and you have multiple properties, creates absolute havoc on your accounting, which then translates to the inability to trust the numbers. And if you don't trust the numbers, how do you trust the numbers of your underwriting? And if you're not underwriting well, how do the investors trust you? So it all starts with a partnership from the top down, from the managers, the leasing agents, the regionals are super important, to your operators. The owners of those third parties cannot be on site. They're not as vested. They can great people, but at the end of the day, they can do great on one property, and on the other property, they may be struggling, and that's because of their team on that property. So you can have kind of a revolving door effect. So it's really important to be engaged and not over micromanage, but let them know and be a part of that. So for that reason, ultimately we transitioned because we were spending so much time, out on the properties and engaging these people and trying to get them to buy into our culture, whether that's bonuses, whether it's gift cards, whether it's parties, things like that. You want them to be a part of your business, because when they don't care, you're going to see a difference in results. And so that's why we transitioned to ownership, and it's made the difference for sure.
Interesting. would you suggest it? I know we have a mutual friend, Rod Cleef. He always talks about ultimately the best way to go is to manage your own properties, is to be the manager. But he always says if you're in growth mode, it's very difficult to be in the weeds of management while you're also trying to buy all the properties. Would you have a thought or feeling on that? Like, is there pros and cons while you're growing? Should you be operating your own or no?
Yeah, no. He's 100% right. The best companies out there and the people that do it. I used to have this exact opposite thought. I was 180 degrees thinking, wow, I can have people manage. I can be doing this. I can be growing. Why would I ever want to take this on? And if I ever did, I wanted to be at 2,500 units. I calculated the math. I did all this. But at the end of the day, the amount of time was so unbelievably ungodly spent managing the management. It didn't make sense because it's an unwritten, ROI. So absolutely, the best companies out there manage their own properties. Now, there are several, and I'm not going to say 100% because there are several owners out there I know that are very large that do third party, and they're fantastic companies. They've got it figured out, but they've got a specific downline in that third party management that is very tight. And I think that's where the magic is. But what I would say, yes, in growth mode, it is tough until you hit a critical mass where you have somebody doing the operations, you have somebody, overseeing your investor relations, until you have an analyst. It would make it very hard to do both at the same time, if not impossible. So for us, we pulled the trigger a lot sooner than we thought, but we knew we hit a wall in certain instances that we were gonna have to cross this bridge sooner rather than later in order to tighten things up, not only for our sanity, but for our returns and the way that, ironically, with our current healthcare crisis and things going on, it really allowed us to reset and concentrate some other foundational issues rather than deals. So it was good timing for sure.
Thanks for going into that. I really appreciate it. We are going to take a quick break, but we will be right back after the messages with Mr. Thomas Black.
What's Blue Spruce Boardroom? It's Adam Adams' private inner circle program that helps serious investors take their businesses to the next level with 24/7 access to our private Facebook community, exclusive mastermind retreats held at luxurious resorts around the country, bi-weekly coaching calls, education, support, and monthly meetings. This is the full immersion you need in order to get from where you are to where you want to be in your real estate business. When you join Blue Spruce Boardroom, you'll become close with Adam and the other members of this exclusive inner circle. You'll meet accredited investors, deal sponsors, high net worth key principals, as well as real estate influencers. The perfect combination for you to take your business to the next level. Apply today by following the link in the show notes.
And we're back with Thomas Black. Thomas, what's a book you recommend?
Oh, geez. What's the best thing that I've read lately? Because I know all your listeners are probably going to say Rich Dad, Poor Dad, and maybe others. I just got done reading Tax-Free Wealth by Tom Wheelwright, one of Robert Kiyosaki's. Great book for people that don't understand tax or don't love tax. I got to give props to the guy. I mean, I love it. That's why I got into multifamily in the very beginning, was for taxes. I run towards the law. I like it. It's kind of a hobby for me. So I would say that's a great book. And you said you had another question though
I've got 5 questions. So the second one is, right. What is your biggest win of the week?
Biggest win of the week? Well, we launched our new platform, as you talked about, Equity MD, that launched last week, and it's super exciting. It took us about a year to build. So that is definitely the biggest, but I do have one that is very short and follow up that we just acquired, a tax and accounting firm that'll be molding under Nepali Capital with us, an Equity MD, that is not only going to be a tax platform for all the things in tax planning, but they're also going to be on our accounting backside. So our new office, we're actually not having to lease out half of it. We're going to be building the entire thing, and they're going to come in underneath that. So that was my one win of the week.
So you read Tom Wheelwright's book and you were like, I'll just own my own. I'll just own my own planning.
Why not? I love it anyway.
Question 3, what is a challenge that you recently overcame in your multifamily business? recently?
Multifamily. Let's see. So we have one property that's in the portfolio that no matter what we did, it seemed like over the last 18 to 24 months, we just could not get stabilized to a level where we were. We went through 2 management companies, and so our win is finally when we've been able to get the right team on the property. Collections are going up, occupancy is going up, and so it's been tough. And the big lesson there is you have to stick with it. You can't throw in the towel. Getting the right team in place is so paramount, because one cog of the wheel goes out, and the chips can fall, which is not fun.
There's so much wisdom to that, and sage wisdom from experience. And I've seen the same. I've seen the same thing. The team is incredibly important. I hope the listener is getting that from today's episode. I've got 2 last questions for you. Number 4 was, what is the one thing that a brand new investor, someone who's listening to the show, never done it before, what do they need to know to get them success in the business? And then the last one is, what's the one thing that an experienced investor, someone who's been doing it, can do to get to the next level? So
Sure.
What do you
Great
have
questions.
for the new person?
So the new person, I would say, it's paramount. I think the biggest mistake I've seen people do is not knowing who your principal is truly, and not having a track record. Just because something looks great on paper, you can manipulate that 9 different ways to make a return look great. And I think most people are aware of that fundamentally. But truly knowing that team, knowing their results means everything, and even down to the point of how they communicate with you. When you email them, how fast do they return? Are they answering with short sentences? Are they giving you a complete answer in a timely fashion in the way that you want it? I think that communication really tells a lot about the sponsors, and and the timeliness. Now, you're always going to get into a position where you're going to have to trust somebody at some point, but I think operations and results speak, and following your gut there. I would say that I think the biggest mistake that I've seen some investors do was they get a little schizophrenic, and they'll invest with somebody, then they'll jump over here because deals are coming at them, and not being patient to wait for the right one. Me personally, I've got probably 2 or 3 that I've known for years that I personally will invest in my IRA fund, things like that, and other deals that I'm not in with, as far as our capital and our assets. So that's the number one thing, is just know your principal really well.
And then what about for somebody who's been experienced, been doing this for a while, but they need to take it up a notch? They need to go to the next level. What would you suggest they do?
I think the biggest thing that I've learned, and I wouldn't say taking it to the next level, I would say, the way I'll answer that is return results, that there is a financial tool for every asset to be used appropriately. Agency debt, bridge debt, CMBS, balance sheet. There is an appropriate tool for a risk profile, risk reward for every single asset. And I think looking back 5-6 years ago, who knows what interest rates are going to do? If we all could have believed that interest rates were going to be in the 3s right now, obviously we would have been bridging everything we possibly could to get out of yield maintenance and things like that. So the way I look at every asset now is a much longer term approach, and what tool is best for that job. And even to this day, we own a hotel, and we're going through some CMBS things, because obviously hotels are not they're not the best cash flowing producing assets at this point. And it's really amazing to go through the process and see that each one of these financial tools operates very differently from one another, and there's advantages. So I think that the seasoned investor and principal knows this. And I think that's the one thing that you can have a little bit more education going into, and realizing that that you can make something profitable, you can kick it up a notch, and you can do really well, or you can do the exact opposite. So I think there's a sweet spot in there.
What's the best way for the listener to find you or get a hold of you if they're wanting to reach out to you to invest, or to just get a quick question answered?
Either Nepali Capital, which is NAPALI Capital, Nepali like the Nepali coast of Kauai, or equitymd.com, and that's just spelled like EQUI itmd.com, which is pretty easy. Even if you Google Dr. Thomas Black and anything, my name, everything's going to pop up about me. So I'm not a hard guy to find by any stretch of the imagination, and I'm happy to talk to anybody. I do it quite often for all of our investors, and I'm literally on call more for my investors than I am for my 70 doctors that I manage.
Awesome. I really appreciate you coming on the show, sharing
Happy to do it.
Everything that you kind of are working on. I think it's awesome that you how important it is for you to focus on relationships. A couple things that I learned from you. You're always focusing on relationships with brokers. You're flying out there. You're actually buying them lunch. In the beginning, when you were raising that $3 million in 2 weeks, you invited everybody over to your home with wine. You talk about how sometimes it's important for you to, instead of going to all the different events that are out there, all the different distractions, how you just focus on operating your deals and keeping relationships with the doctors so that you can continue to help them out, raise money. And it seems to be really helping out your business. You're at $250 million. There's a lot more takeaways that I got from the show. I think that we had a lot of fun with you. I'm going to let you go. But until next time, my friend, think outside the box. As a reminder, any investment opportunities mentioned on this show are for accredited investors only. And if you're interested in working with me and my team, then go to realbluespruce.com and click Get on the List. It's that simple. Just click Get on the List to start passively investing. This has been an episode of the Apartment Investing Show with me, Adam Adams. All rights are reserved. And if you haven't done so already, then make sure that you absolutely smash that subscribe button. And I'll see you on the next episode.